Right, well, a number of health insurance stocks took a hit yesterday after UnitedHealth said they were seeing an increase in hip and knee replacement surgeries. But today, it's a different story. Medical health insurers are now rallying. Yahoo Finance's Anjalee Khemlani has the details for us. Hi, Anj. Why the turnaround here?
Hey, yeah, well, to start off, let's just take a step back and get a sense of where this came from. It came from a United Healthcare executive at a Goldman Sachs conference saying, quote, that they're starting to see seniors getting more comfortable with accessing services for things like knees and hips and the like, and that really puts pressure on Medicare spend. So that's what really set off that hit in the stocks. If you take a look at what that really means, it's what is known as medical loss ratio for insurers, and that is required by the Affordable Care Act, where insurers are basically supposed to spend a good portion of the premium dollars that they get in. That number is 80 to 85%. That's what they target. So if it's not met, then they end up having to rebate those dollars back to the clients, which typically happens actually more in the individual market rather than large group or even, Medicare and the like. So what really we're looking at is the Medicare side of it. And of course, we know those players are some of the largest in the country, including the likes of United, Cigna, Humana, Centene, and the like. All of those are really where the pressure was building up. Now, what they really have to look at is UnitedHealth's projections. They did say in the last quarter they were looking at 82 to 83% of that MLR number, and that still holds. It was just up slightly based on this uptick in surgeries, and that is coming from the pent-up demand that we saw because of COVID, of course. That really put a damper on any kind of inpatient or outpatient surgery, and that's what we're starting to see, just a little bit of an uptick. Now, this can possibly impact these companies moving forward in the upcoming quarter on whether or not they priced correctly their prices and their bids for the spend for 2024. So that's where it becomes kind of an issue that they need to look at on whether or not they accounted correctly for the potential uptick, or if this is just sort of a smaller blip that they're just starting to see a little bit right now. So that could affect their revenue moving forward, and that's where some of the confusion came from. Some analysts said it would be an overreaction or not necessarily accurate to look at all the companies broadly as a result of this, but we'll have to just see when their next round of earnings comes up to see exactly what happened with these numbers.
So then, Anj, for consumers who are wondering, look, should I be worried about, my costs going up, or how soon I might start seeing this showing up? What should they take away from this?
Well, generally, there actually is, a look at numbers for the upcoming year. There is potential for increased premiums, but this, like I mentioned, largely affects the Medicare business. That's where they're looking at potential for the increased rates and increased spend. There are other numbers that just came out yesterday looking at the estimated spend for the larger commercial market, and there might be a slight increase in premiums, again, because we're now seeing more utilization of the healthcare system. Broadly speaking, people are getting back into the routine of seeing the doctor, scheduling surgeries and other procedures. And so we can expect that that's going to increase the spend for the companies, for the insurance companies, and therefore translate into a slight increase in premiums. So that's just what the projections are for now. And of course, when the rates come in, we'll know more for sure.
All right. Well, thank you for getting us up to speed on that. Anjalee Khemlani there for us. Thank you.